Derek Yan, who serves as a senior investment strategist at Crane Shares, appeared on a recent CNBC program where he shared a detailed analysis of Palantir Technologies. He believes Palantir has the potential to evolve into what he calls the operating system for businesses in the realm of artificial intelligence. This means he sees Palantir as a company that could become a central and essential part of how enterprises deploy and manage artificial intelligence solutions. His comments were meant to help investors understand why he remains optimistic about Palantir even when others have raised doubts. He went on to explain that Palantir provides a powerful opportunity for investors to reshape and transform the enterprise market, working alongside many other artificial intelligence technologies that are currently in development. He addressed the recent wave of stock selling by pointing out that it was mostly influenced by large-scale economic conditions and profit-taking by some investors. According to Jan, his team has held Palantir for over a year, and during that time, the stock price has grown to exceed $150. Many investors are worried about how expensive the stock seems and about the possibility that tighter financial policies could trigger risk reduction among market participants. Despite these concerns, Yan referred to Palantir as a rare and unique structural growth opportunity. He emphasized that the adoption of artificial intelligence agents is accelerating at a rapid pace, which is an important signal for long-term growth. At the same time, he pointed out that the cost per token for artificial intelligence operations continues to decline. As costs fall, companies will see a much better return on investment when using Palantir's services to automate their internal workflows and operations. This creates a cycle where more businesses will be drawn to Palantir's offerings, which in turn strengthens the company's position in the market. Palantir has already managed to prove many critics wrong by defying traditional valuation models. The company has maintained an unusually high price-to-earnings ratio while continuing to deliver consistent growth. In the most recent reported quarter, Palantir achieved a revenue increase of 48% on a year-over-year basis. Its guidance for the entire year points to sales growth of about 45%. These numbers suggest that the company's growth trajectory is still strong even as competitors and analysts watch closely. Some market observers have expressed concern that Palantir relies too heavily on a small number of customers for most of its revenue. Critics argue that such dependence could become a risk if any of those customers reduce their spending. However, the overall indicators show that Palantir is well positioned to continue its growth. This confidence stems from the fact that Palantir's artificial intelligence platform has become a crucial tool for companies that need to deploy and operate artificial intelligence systems and infrastructure. As artificial intelligence adoption spreads across industries, Palantir's platform is increasingly seen as indispensable. The broader trend of artificial intelligence software growth is still in its early stages. This means that companies like Palantir could see significant opportunities for expansion in the years to come. Supporting this expectation is the forecast for hyperscaler capital expenditures. These investments by large cloud providers are expected to reach $1,150 billion between the years 2025 and 2027. This amount is more than double the $477 billion spent between 2022 and 2024. Such a dramatic increase in spending suggests that the infrastructure and services needed for artificial intelligence and related technologies will grow rapidly, which should benefit Palantir as a key player in this sector. The Carillon Eagle Midcap Growth Fund also shared its perspective on Palantir in its second quarter 2025 investor letter. The fund described Palantir as a leader in artificial intelligence software and services provided to government organizations. According to the letter, Palantir reported strong financial results and issued a positive outlook for the future. The company secured large contracts from both the United States military and the North Atlantic Treaty Organization, which reinforces its role as a trusted provider of critical artificial intelligence solutions. In addition to its military contracts, Palantir has been successful in expanding its business with non-military agencies within the United States government. This demonstrates that its products are not limited to defense-related uses, but are also being adopted by a wide range of governmental functions. Furthermore, Palantir has been making notable progress in the commercial sector. Its artificial intelligence applications have proven their value to businesses by delivering clear and measurable benefits. These benefits have been showcased through Palantir's bootcamp demonstrations, which allow potential clients to see firsthand how its technology can improve efficiency and decision-making. This combination of strong government partnerships, growing commercial adoption, and rising industry-wide demand positions Palantir as a company with significant long-term potential. Analysts who have examined examined Palantir's performance and opportunities, are pushing back against investor worries, stating that the company could become the operating system for enterprise artificial intelligence. They argue that Palantir's focus on providing cutting-edge solutions for complex data problems gives it an edge that few competitors can match. When you consider all these factors together, it becomes clear why Derek Yan and funds like Carillon Eagle Midcap Growth remain bullish on Palantir. The company has shown resilience through economic fluctuations, maintained high levels of growth despite skepticism, and secured contracts and partnerships that reinforce its credibility. As artificial intelligence adoption accelerates and infrastructure investments expand, Palantir is in a strong position to capitalize on these trends and deliver value to its customers and investors. In the end, Derek Yan from CraneShares expressed on CNBC that Palantir Technologies could become the operating system for businesses in artificial intelligence, explaining that recent selling was likely due to economic factors and profit-taking rather than company weakness. He emphasized that falling costs and faster adoption of artificial intelligence make Palantir's services increasingly valuable, and despite concerns over its valuation and dependence on a few customers, the company has defied skeptics with strong growth, including a 48% year-over-year revenue increase and a full-year sales outlook of about 45%. Hyperscaler capital expenditures are expected to more than double to $1,150 billion from 2025 through 2027, suggesting continued momentum in artificial intelligence infrastructure. Additionally, Carillon Eagle Midcap Growth Fund highlighted Palantir's strong results, major contracts with the United States military and the North Atlantic Treaty Organization, and growing success with both non-military government agencies and commercial markets, reinforcing its role as a key player in artificial intelligence solutions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.